I don't know if anyone's actually watched the other videos yet, to be honest, to see whether or not the audio quality is better, but I have listened back to a little bit of it and I think it is, so hopefully we're heading in the right direction of that, because some of the older videos, just to annoy me trying to listen back, you should just clip out like the start and end of words and all that. So I changed the AI filter that I was using for the noise gate, and hopefully it seems to have cured it. So we'll just continue on and see what happens. But first things first, same as always. For those of you that don't know, I don't know what I'm doing. I have no financial background and I hold no financial qualifications. This YouTube channel is simply me vlogging my educational journey towards hopefully becoming a successful investor. So this video is for informational purposes only and does not constitute investment advice. Any opinions formed during this video are my own and not recommendations, and are subject to change without notice. Please do your own due diligence. Please do your own due diligence and consult a licensed financial advisor before making any investment decisions, because I do not know what I'm doing. It's in the intro to the video. So here we go. All right. Keep saying, don't I, for the last few videos now, I keep saying I'm going to change the screener or change the country, but at the moment I think we'll just continue going down through. I did just click download these that we looked at earlier on in the year, and none of them have actually, other than this one, we literally only did that a few days ago though, last week maybe, so something's obviously happened. I don't think it was doing very well at the time, not that it's doing particularly well now, but anyway, we'll just continue down with the screener for now, I think, and go from there. Right. Jewelers, okay. I mean, it looks like they've had quite a rally already, unfortunately. It was over a year ago, to be fair. Right, I've got two spreadsheets. I've got a main spreadsheet where I really analyse stuff in. And I've got I'm going to sneeze, pardon me. Dear me. And I've got a quick take spreadsheet, which it literally takes a few metrics, simple metrics, simple free cash flow, multiples, return on capital, which is Joel Greenblatts' return on capital thing. It's very similar actually to the way Lee Lu was doing return on deployed capital with EBIT and simple free cash flow. I do that on, I look at tangible book value as a proxy for liquidation value, and if it passes this loose screen, then I will potentially chuck it into my main spreadsheet, which is here. I've got a shit ton of metrics, highly influenced by Rory and Kitty's spreadsheet actually. Yeah, and then we'll see what's happening. But at the moment, as we're just going down through here, down through the screener, we just bang them in the quick take spreadsheet and see what comes up. I don't tend to like stuff that's rallied so strongly. I mean, it doesn't mean the rally ain't going to continue, but you've basically missed a large portion of it, haven't you? When it's rallied like that, when it's bounced back like that, it's bounced back. You know? I mean, what's that going to be? Oh no, it's not all-time highs, but it is close. It's topped out here several times, that price. So realistically, not that historical performance is indicative, but you've not got much upside left to you reaching an area where price has been up there 1, 2, 3, 4 times before and never broke through. So we'll see. What does it say in the quick take spreadsheet? 20%, 20%, 30% return on capital. Simple free cash flow one's pretty good. 14% yield, 7 times earnings. It has been higher, like 10 times earnings. Well, 10 times free cash flow, not earnings. It has got a tangible book though, $30 tangible book. So I'll tell you what, when was that? I'm just intrigued now, actually, just to put it into the spreadsheet to see what a tangible book was way back when. You had like $30 worth of tangible book, and you could buy the whole thing for like $6.50. That was a classic value investment there, wasn't there? Let's drag it in and have a look. Right. Delete these old ones from GTM. What was it? Signet Jewelers. Quarterly data, because I use rolling 12-month data. So that means no matter when I look at it, I can always look at it in the same state as what it was in previous years. That comes from, well, I think most of them do it that way, but I got it from Joel Greenblatts, and then I actually realised that Roaring Kitty was doing exactly the same thing in his spreadsheet. Right, tangible book. What year was that? That would have been a classic value play. 2020, alright, loads of COVID. But even then, it was on a decline before then. COVID hits here. Started to recover a little bit, I guess. COVID hits and it drops down even lower. But $11 you could buy. What's that, 2020? So, where are we down here? Tangible book value, 2020. $23 worth of tangible book value. Tangible book value as well. And you could have picked it up for like as low as $6. Classic value play. Gross margin slowly got better, look. But revenues are down. Higher than almost 8 billion in 2022. Now in 2026, lost almost a billion. Well, almost 1.2 billion. What am I seeing in this then? No interest expense. Have they got no debt, or is the debt wrong? 1.2 billion in debt. What cash have they got? 600 million, so I can't imagine the debt is too much of a problem. Diamond jewellery. Moles. I haven't heard of these. Not that I potentially would have done. I'm in England for a start, but it's very frustrating, actually, I will say, because the US markets have without a doubt got the best available data. At least I think so, especially compared to the UK markets. Like, having the SEC website is unbelievable, having it all in one place. I wish the UK would have something like that. Literally just a searchable database is, so one of the main reasons I stick to like the US is because of that, because of the availability of the data. It's a lot easier to find than what it is in the UK. But the US markets are so overvalued. There's not a lot of upside available, really, and most things are really overvalued. So it's a swings and roundabouts thing. I'm heavily starting to think about looking elsewhere, but because when you're starting to get down to here, like, you're talking about 7-8 years to buy out the company from free cash flows. It earns enough free cash flows to buy the company back within 8 years. Well, Monish Pabrai is a very big proponent of the company should pay you back within at least 3 years. So yeah, 8 years is obviously more than double that. So what are we seeing there? Let's just pull up the actual balance sheet. So let's just do this. A minute, new chat. Just ask a little bit about the business, shall we? Sorry, I'm just doing something off screen. There. In here, this is the usual question I start with. And what is it? Signet Jewelers. There, Grok. Signet Jewelers. Right. There is SEC. Oh, SIG. 10Q interactive data. Right. So first off the bat, what is this here? Open something. Oh no, I haven't. Sorry, just trying to read something. First off the bat, I have a base understanding of what the business does. So, world's largest retailer of diamond jewellery operates 2,600 stores primarily in the US with smaller presence in Canada, UK and Ireland. Okay. Multi-brand, omni-channel specialty retailer focusing on the middle market. Core products, diamond jewellery. House of brands serving different customers, segments and price, covering 80% of US category spend in core areas. Major US brands include K, Sales. Okay, so do they own these? Is that what I'm saying? Jared Diamonds. Blue Nile. I mean, I haven't heard of most of the H. Samuel and Ernest Jones. Is that true? Let's Google that. H. Samuel. The Wikipedia page. Wikipedia, yes it is. So they are, okay. So they're the overall. I can get it cold. Owns and operates companies Blue Nile, Zales. Okay. I've heard a few of them, but H. Samuels, Ernest Jones, they're UK jewelers. Okay, interesting. There's definitely some value in that, I would say. A combination of brick and mortars, kiosks, companies been optimising real estate footprint while growing online. So, have they been growing their lease? That one, balance sheet. Total assets. What have we got there? 700 million in goodwill and intangibles. So 5 million in total assets. It's 5 billion, isn't it? 5 billion in total assets, 3.8 billion in total liabilities. Operating leases is quite high. Now, I am of the opinion that operating leases shouldn't really be treated like true debt. I think most value investors are probably of that opinion. Sorry, I'm just taking a drink. Yeah, I think a lot of value investors are of that opinion that it shouldn't be treated like true debt. Because you can't get out of true debt. Not about paying it off, but operating leases, you could sublease the place and all that. So it's a very different type of debt. Okay, revenue breakdown. Up 1.6% year on year. North America, 93% of the total. Wow. Wow. Small portion in North America. What's the right? So they got 500 million in property, plant, equipment. Inventories are probably going to be worth more then, aren't they? Because inventories are held at cost. If it's diamonds, it's probably worth more. Is it logical to think inventories are probably worth more than stated, as they are held at cost, but price can be significantly higher to the end consumer? Let's have a look. I don't actually know what diamonds are worth at the moment. Gold's obviously doing very well. Logical to think that in a broad economic or liquidation retail sense, but accounting rules and practices rarely add important nuance. Inventories are valued at the lower cost or net. Estimated selling price in the ordinary course of business minus reasonably predictable cost of completion disposal. Okay, forces write-downs of items are obsolete. Okay, but yeah, so that is probably lower than what they say. 600 million in cash, 2 billion's got quite good current assets, current liabilities, accounts payable, operating leases. Okay, doesn't look like they've actually got any true debt. Now, have they got any true debt? Leases. Doesn't look like it, does it? So that's interesting. What is this? 3 months. Okay, so it's Q1. Cash flows. Anything strange added back in? Net cash used in operating activities, 140. Oh. Okay, hang on then. Is that a common thing? Q1 negative, Q1 negative, Q1 negative. Or Q4 at Christmas is their absolute beast. Almost all revenues are in Q4. That is interesting. Explain the working capital. What would you call it? Structure. Timing. It seems almost all CFO is made in Q4 and all Q1s are very negative. It's obviously because they're trying to rebuild up the inventory. Is this a post-Christmas inventory rebuild? Got the NASCAR on in the background. There's a lot of shouting going on, but post-Christmas inventory rebuild pattern driven by Signet's extreme holiday seasonality. Yeah. Okay. So what was it before? 175. Accounts payable. What was inventories then this time last year? 190, 192 billion. 1.9, 1.92 billion. Okay. 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 So I'm not seeing anything that I don't like there. Future forecasts, revs and free cash flow. So there's no real debt, is there? There's no true debt. Free cash flow margin's been down a bit on it. Very interesting. What happened there? Sorry, I keep getting distracted by the TV. I should probably turn it off. Try to record a video and get distracted by the TV. See what the... I don't know then. They're gonna... I mean, they must have... They're gonna have competition like peers, but who? I don't know. Total sales 6.7. That's flat to low single digit growth. What was it last one? What was it? TTM 6.8. So actually it's down. MPV is put 6 billion in, shall we? No, it's too low. 6.5. We'll do that. 6.5 billion. Seven times earnings. Simple free cash flow margin historical average is quite high, but the business is not doing as well, is it, post-COVID? What else are they forecasting? Same source sales, depending. Operating income raised. I don't think it's overly cheap anymore, let's put it that way. It certainly was. It was certainly very cheap. CapEx is guided 150 to 180 million. Revenue. Earnings growth, free cash, historical strong generator, 525 million upwards. What have I got down here then? Simple free cash flow. There, 681. Look at these numbers. Sometimes they've had a whale of a time. 500. Eight times, yeah. It's pretty much what I've got. If you're making 500 million free cash flow, because this is a higher year, you're still looking at about 8 times. That's not cheap, is it? Round about what, the 7-8 times, yeah. What would you sell this business for then? Was it changed out historically a multiple? Simple free cash flow to EV. It's all over the place. You can't cap. I can't change it. I can't change it higher, can I? Than that. What's this least heavy one do? I can't remember that. Let's have a look. $80 to $90. 7 to 880. Yeah, sounds about. It does sound $10 a share times multiple 8. Yeah. It does seem like it's fairly valued to me, to be honest. I don't think there's any upside here. Who are their peers? Spending a long time on this one again for something that I'm pretty sure has got no true upside available to me. It did here. Bloody did here. Even there? I would say so, even there. So copy and paste that. See if she comes back down here again. Put an alert on it. Add alert. Expiration. Custom date. As far out as I can put it. I wish you could put it further. I'd like some in perpetuity alerts, but can't happen, unfortunately. Not at the moment, anyway. What was I doing? I was reading Grok, wasn't I? Pandora. Okay, they are publicly traded. Heltzberg Diamonds, major US chain, but a privately held Berkshire subsidiary. Owned by Signet, also owned by Signet. So, Tiffany, LVMH. What's LVMH? Is it a holding company like this? Tiff traded as. Who owns it now? Louis Vuitton. Problem is that's more than jewellery. It's very difficult then, isn't it, to you can't use that, can you? Because it's not just. You need to find like a true peer. Pandora. Nope, not that Pandora. Business. Come on. Jewelry. It's on the NASDAQ. Is it? No, NASDAQ Copenhagen. See if I can find it on here. There, PNDZF. Strong buy. I just wanted to know what their what their multiples were. Peers, peers. Sig there. Of course, much bigger. PNDZF. Shall I see if I can drag that in? Does it show up? PNDZF. Problem is, it's not. No. Pandora. Yeah, there's a few of them. I can't imagine they will. I can't imagine they'll be in US dollars. PNDZ. Yeah, we might have to try and find it here. This one. Classic. Oh god. This ain't right then, is it? That's not right. It's the only one, isn't it? But there's no. No. Oh. Can we find it on Yahoo Finance? I just want to see financials, cash flow. What's it trading at? TTM, operating cash flow, invested. Oh, they've only got investing. So you're, what's that going to be? 5.5 billion in free cash flow. There you go, 5.7 billion free cash flow. So, what's the enterprise value? 5.7 billion free cash flow. Enterprise value. Fuck off. What? That's trading at. That's trading at less than 2 times. Pandora. That cannot be true. Price to sales, price to free cash flow 7. Maybe we should try and look into Pandora, but I don't. I'm gonna have to try and figure out how to drag that one into the spreadsheet. There's no way that's right. Delayed quote US dollars. This ain't gonna be dollars though, is it? Financials, cash flow. all numbers in thousands. 5 billion. Yeah, this. Is anyone else seeing this? Am I? Why does it say it's only? Price to free cash flow is saying it's 7, but on an enterprise value, what's the difference between the market cap and the enterprise value? It's almost trading at 1 time. That ain't right, is it? 1 times earnings. I know we were looking at Signet, but now I'm sorely tempted to try and pull this up and actually look at it properly. But we're going to have to do it this way, because I don't actually know where to find this stuff. Annual reports 2025. I said this is the problem with having to do it in the UK. You gotta try and go through it all. Right, hang on then. Oh, there we go. Statement of cash flows. Free cash flows 5 billion in DKK. Right. What is then DKK million? Right, exchange rate DKK to US dollar. Ooh. Okay. 5,000. So 770 million. Oh, why can't you have your 5 billion? I don't know. Let's just go to 5,000. 5,000, yeah. And then 6 more. Alright, oh, I don't know, I'm getting confused now. Looks like it's 770 million in free cash flow. So what is their enterprise value? Why has this changed so much as well? Look, acquisition, oh, bought something. They bought something. They paying dividends. 22, 20, when was this? March. Okay, so they only pay 1 a year. Is that what we're saying? March, yeah. March 25, they pay 1 dividend a year, 20 DKK. Which is what? Now, 3.5%. It's not great, is it? But this, right? Balance sheet. Where's the balance sheet? Here, assets. Ooh. That's fucking nasty. 3 billion in PPE, 19 billion non-current. Total non-current assets. Total current assets down here. Okay. So it's all in bloody krona. Is it krona? I think it's krona. Current assets inventory. Potentially higher again. Although I don't think Pandora is like as many diamonds and stuff, is it? Right of use assets. What's the liabilities? Total liabilities 24. Wow. So their tangible book value is going to be negative. You've got to take away 5 in goodwill and other intangibles 6 billion, so 23 billion minus total 24 billion, so it's negative. Not great. Loans and borrowings, 3 billion in loans and borrowings, so they're more levered than loans and borrowings there. Total non-current, fucking hell. So what's that? free. So there's 15 billion kroner, 2.3 billion in debt, and they're only making, well, I say 2.3 billion, they're only making 700 million in a free cash flow. Is what we're saying, and there's 2.3 billion in debt. This is a problem of having to do bloody currency conversions, and I can't. Can I pull it into my spreadsheet? Let's see if we can find Pandora. Which one is it? How do you know which one it is? Let's not do it on that one. And let's see if this is correct. At the moment, we might just be better off doing this. I will put them for now in the, because I've got a comparison page as well. No, PNDORA. It's going to be that one then, is it? Let's have a look when it pulls it in. DKK. Just make sure some of the figures line up. Cash flow statement. What are we saying? 42 million operating activities. What's this? This is the fucking annual report in it for 2025. Right. Which would be here. 5 billion. Is that correct? Nope. Where are we? Here. No. 7 billion. So this is not correct, is it? What else is there then? If this isn't the right one, it's got to be the right one, but incorrect. Revenue 7.2 billion. No, what am I doing? Revenue 32. Yes, definitely not correct. Oh, it's the quarters mind in it last year. Sorry, 32. There it was correct. It was correct. It was me being an idiot. It was me being an idiot. So, this is quarters in it. So this might be correct. Hang on. There, 7.36. 7.361. Okay, so the figures are correct. Got to take the currency conversion into it, but right. Where is comparison 1, income statement, comparison 2, sorry, comparison 1, balance sheet, yeah, comparison 3, sorry, no, comparison 1, right, now, cover, which one is it, where is it going in? I'm guessing probably in this one. What are in these then? The fuck's happened here? What has happened here? I don't know, old stuff in there. Right, hang on, the income statement, balance sheet, cash flow statement. So, this is the only one left. What was the fucking ticker again? Do we remember? PNDORA. Right. Okay. Enterprise value 22.7. What is the enterprise value on here? 9.3 US dollars. Okay. What was it? 22.7. 22,705. 22,705 times, was it 1.5? $3.4 billion. This is what are they saying here? 9.3. So that ain't right. Oh, come on. 0.15. 1 Danish kroner What am I saying it is here then? 22,705. Yeah, 3.5 billion. Why does that not remotely line up with that? What have they got it as? Where am I going to find it on here? It is on here somewhere. Nope. Where am I going to find it on here? Sorry, I just punched the microphone again then. Valuations? Nope. Market cap, total debt, yeah. What is wrong on here then? Nope. Something's not right, is it? Is this in US dollars? And this is in market cap. $6.3 billion. Okay, so that's in dollars. Oh, we could be getting some cross-contamination here, maybe. This is DKK. DKK. So I'm guessing... Alright. Where's the comps there? Let's go to here for a minute. Try and work it out. Right. Sorry, getting distracted again. This is going to be harder to fucking figure out in the spreadsheet than I thought. Have they got an enterprise value wrote down? Oh, Control F. Where are we? Enterprise. 1 of 8. Don't expect so. Nope. Now I've got to find all this crap at the bottom. First off, I want to find the balance sheet. Pandora, that's in DKK, 579. What was that in US dollars? Can I... Where was it? 89 US dollars. But this is not saying that, is it? It's not saying it's 11. Something ain't right, is it? What is wrong here? Comps J1, which is where their price H1I. That ain't right. Something's not right. So we're gonna have to do it the long hand way. Head and shoulders back there, look. Boom, 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 boom. Right, I want the balance sheet. I want to know about this debt. Loans and borrowings, non-current 7.7 billion. 7757. Let's see. 7757. Just make sure I'm doing the right thing on the calculator. 1194. Okay, close enough. So 1194, 1 billion. Loans and borrowings. What's the current then? 1614. Problem is I should be making notes on this, shouldn't I? 248. So what was it? 248 plus so what are we saying about 1.5 billion? about 1.5 billion in debt, on top of a market cap, as in US dollars. How do I find it not in US dollars? Which one is it? Where? I don't want investor relations. On Wikipedia. Traded as Nasdaq Copenhagen, PNDORA. Is that on here? That one. DKK, there we go. Right. 579. Now, problem is, it took me so long to find that. I can't remember what I was looking for. It was on here. Nope, I was on here. Oh, market cap. $43.3 billion. Right on. That's right. Oh, this isn't even up to date though, is it? Where's the latest one? I don't want an annual report, I want an interim report. With a balance sheet, first quarter 2026. Investor presentation. Interim report announcement. Balance sheet. Nope. Here's a moment. Right. Balance sheet. So we have got, where are we? Oh, this is going to be 43325 minus. To be honest, I probably could have done it on here instead of trying to find it on there. Not the latest one, that's the latest one. 43325. Where's cash? $28.26 minus 826. That's not very good, is it? Total debt. Where is it? Plus 14,393 plus. Where are we down here? 2523 59,415. What have they got it as? Statistics. Enterprise value 59. Right, okay, that's fine. It's exactly the same as me. I should have just fucking done it on here, shouldn't I? Find the right one and do it on here. What are they saying free cash flow is then? 5 billion. $5.7 billion in free cash flow against, right, 5723, remember that. 5723, you know. What was it? 5723. Ten times EV to free cash flow. How can I not just work it out just by looking at that? What a fucking idiot. So if that's at 10 times free cash flow, this is why my metrics are not going to be all of this for this. Look, 10 times free cash flow. This is trading at less than that by a mile. But I still don't think there's much upside when you look at it historically. We ended up trying to figure out if this was cheap, didn't we? Price to free cash flow, 10 times, 14, 10. It's been very consistent around 10. And now it's at 7. Right. hour on basically nothing here. Because I don't know if this is actually that cheap. 5723. Why is that trading at 10 times and this is only trading at 7 then? Oh, I don't know that there's I still don't know that there's upside there. Who was the strong buys? Was that Pandora? Strong buy, February. There. I don't see it. It's already at 10 times earnings. Free cash flow margin has dropped. Look, this one here, look, free cash flow margin. It was around the 20s. Oh, I got it in here in the comps. It's in free cash flow, yeah, around the 20s. So even though the price is wrong, historically around the 20s. What's the free cash flow margin for this one? Oh, much lower. So Pandora is much better at turning it into cash, which is probably why it's trading at a premium multiple. It's significantly better. Gross margins, significantly better. It's a much better business. It has a much better business. SG&A margin's very high though. Neither of them. Oh, this has got a tangible book value. Pandora's got a terrible tangible book value. $54. Yeah, but this is a problem if my shit is right. Because that can't be right. 54. Revenues a share, 54. That's only doing that. What's it saying on here? Statistics. Let's see. Down here? Oh, okay. Okay. Total revenue, let's just check that is correct. 32311. Oh, come on, turn on calculator. 32311 divided by, that's billion, 32 billion divided by, where's the share count? I know it's here somewhere. Nope. Where is it? Where is the share count? I know it's here somewhere. What was in statistics? But I'm wrong. Analysis? Nope. Where is it? Where the hell is shares outstanding? Am I being stupid? Ain't there, is it? I thought it used to be here. Profile, is it in the profile? Nope. Fuck off, where is it? I know it was here somewhere. Shares outstanding on Yahoo Finance. Statistics tab, that's what I was on, wasn't I? It ain't there. Oh, hang on, not going down far enough. What a fucking idiot. Shares outstanding 74 million. So we've got 32. 74 million shares against revenues of 32 billion. Q. 32,311 divided by 74. 436 krona a share. 436 times 0.15. 65. So this ain't right, is it? Something's going funny here with the how it's working it out. Promise Pandora looks so cheap, but chart wise. There's no asset value because of the debt. The right balance sheet. Tangible book value negative. Yeah. Total debt 15 billion. Net debt 8 billion. 15 billion. Where's the cash? 1.3 billion, and that's it. Yeah, alright, I'm going to pass. Even though this looks beautiful, I'm going to pass on it. Let's just see why this guy thinks. Deep discount after 50% share price decline despite strong business sheet transition. 2027 expected to be a trough year. Dear me. Nobody buys a farm based on whether they think it's going to rain next year. They buy it because they think it's a good investment over 10 to 20 years. I mean, it's got a decent free cash flow margin. It has a decent free cash flow margin. Where's the statistics? What statistics have we got? Price to sales. Price to book. 10. Whereas the assets could be miles different now. Let's just read this. I'm getting tired. I'm gonna have to call it a day, even though we've only looked at a couple of stocks. This is the problem I got. Hedged over 90% of its exposure to silver prices. Second, it's far from certain that silver prices will remain this high in a year. Some estimates of silver's all-in sustaining costs up like $20 per ounce. Pandora has delivered healthy revenue increases in the last few years, if these revenues are correct. Yeah, they have. Margins have been under pressure due to foreign exchange and higher commodity cost headwinds. Despite headwinds, they remain best in class. 23% operating margin is higher than. Right, let's have a look. Operating margin 23%. Operating margin 5%. Oh, it is a miles better business then. Not even close, is it? In the most recent quarter, organic growth decelerated to 6%. Reported growth was basically 0% due to unfavorable foreign exchange rates. So on operating margin, 5 years to buy the company on operating earnings. Not only does Pandora have profit margins that are rarely seen outside of technology sectors, are also considerably above its cost of capital. What have I got? The return on capital as? Oh yeah, 50%. Wow. Wow. Pandora is close to fully hedged for 2026, with management share enjoying these. Company increases coverage. Issues that hedging eventually runs out. This is where management has shown real creative thinking. They developed a proprietary process to create platinum plated jewellery based on their consumer tests, and they expect platinum plated products to perform on par with their silver offerings. Pivot towards platinum comes with additional benefits. First jewellery brand to bring. We'll keep punching the microphone again. to bring platinum plated jewellery to the market scale, combining precious metal aesthetics with superior everyday performance. In daily wear, platinum plated jewellery outperforms silver. It does not tarnish. Financial benefits straightforward. Exposure to silver prices will decrease considerably more than the added exposure to platinum prices. Platinum does add labour costs. It takes more time to craft. It does. The advantage is that labour costs tend to be more stable and predictable than commodity prices. Pandora is guiding 2027 to be the transition year. Pandora's earnings are expected to decline significantly in 2027, but quickly rebound after transition to platinum-plated jewellery. Real opportunities are rare when they present themselves. They should be seized. Insider transactions. Ooh. Also reassuring to see some insider purchases after the latest earnings report. They were modest, but still encouraging to see several insiders buy in. Right. Free share price. Is that US dollars? 83. Gotta be in it. Can I find it on here? Probably. Got that, but what was it? PNDORA or something in it. Is it gonna come up? PNDORA. I don't know what I did then. Pandora. Is it gonna come up? Pandora Wealth. Is this one in it? AS Ordinary. Gonna be that one. Any owners? Might not be on the right one. Keep pressing the caps lock button. Bugger off. Anyone? No one. Okay. Close that, close that. Read this. Oh, I don't know about this. Asset-like business models allow to run most of its profit to shareholders through dividends and buybacks. In a sign of confidence, what's the buybacks been like? Oh yeah, semi-significant. Dividend yield of over 4%. It's obviously lower when he buying back its shares. $950 million buying back shares. 41% of his shares since it's like, really? That's interesting. Shareholder friendly company then, you could say. Guidance is for 2026 see sales close to those of 2025, while profit margin expected to decline modestly. Commodities and tariffs are expected to reduce the EBIT margin by more than 300 basis points, resulting in expected margin of 21 to 22%. Profit margin, so what's that EBIT margin? Real impact expected to be 27 once gold and silver hedging runs off before transition to platinum. Right, I want to ask a question here. Why do Capitals Jewelers hedge gold and silver? I'm gonna have to call this one a day in a minute. Literally looked at a couple stocks again. Jewelry businesses hold significant physical inventory and operate with thin to moderate margins on making fabrication charges. Gold and silver prices can fluctuate sharply. Downside where inventory bought at higher prices loses value. This can force write-downs, road gross margins when sold, tie up capital in less valuable stock. A sudden drop in e.g. silver's 23% plunge could be devastating without protection. Upside risk. Replacement inventory costs more, squeezing margins on future sales. Retail prices can't be adjusted quickly. Higher prices also increase working capital needs. Okay, yeah. Hedging out like it looks in effective purchase options. How hedging typically works, that was my next question. It's read my mind. Jewelers use financial instruments, futures, forwards, optional structures like gold, metal loans, gold on lease. They take on opposite position in a derivatives market to their physical inventory of future needs. For example, buy physical gold long, simultaneously sell futures short. Price changes in one offset or the other, leaving the spread. As items sell, hedges are lifted proportionally. This keeps the business neutral to spot price moves while focusing on. Signet has reintroduced or used hedging for a portion of its gold requirements to better manage inventory costs and margins amid volatility. It helps clearance restocking. Pandora hedges a high percentage of its silver and gold exposure to protect against cost inflation. Many organised large jewelers hedge most inventory via futures, loans or derivatives for the same reason. Smaller players sometimes don't, exposing them to bigger swings. Stable retail prices without fear of immediate cost by working capital, less volatility in inventory valuation. Hedging removes the gamble on commodity prices so jewelers can focus on selling beautiful products to customers without volatility in gold. Silver will make earnings far less predictable and increase bankruptcy risk during sharp moves. This is standard risk management. Okay. Retaining EBIT margin above 10% during a significant difficult period shows the quality of the business. Most valuation metrics are close to their 10-year lows, including the trailing 12-month price earnings ratio and its EV to EBITDA multiple. I mean, I haven't got 10 years in it, and I'm not sure I trust the data too much, to be honest. But what are we saying? $12-year low, 10-year low, EV to EBITDA, price to earnings. I got price to earnings on this one, and I price to sales there. What are we saying? Price to sales of 1.35. Read this number here, it changes as we go back in time. 2, 3, 3, 2, 3, 2, 2, 2. Okay. The fact that it's only at 1.4. Yeah. Oh, come on. 10 years, he's saying. 2, 2, 2, 2, 1.4, 2, 3. Okay. It does look low compared to historical. This is expected to be the most effective year in transition. Risks. The risks are associated with the platinum jewellery pivot. There are some risks that consumers will not respond as well as the company expects based on their initial testing. There's no doubt that the massive surge in gold and silver prices presents a challenge for an affordable luxury retailer like Pandora. Unfortunately, the company has hedged most of its commodity exposure to 2026 and has planned to reduce exposure to silver prices in the future. This involves pivoting to platinum plated jewellery and doubling down on earned media. 27 will be a trough year in terms of profit. EBIT management appears confident they will return to EBIT margins above 20% and strong free cash flow generation once the transition is completed. So what does that mean? Well, I know what it means, but how are you timing that? Because if there's going to be a whole of a year of it being dog shit, the price could come down even further, couldn't it? Well, we looked at SIG and then they've ended up, because I'm not going to say anything about that, I think that's probably fairly valued, but we've ended up with Pandora, which has the potential for something, doesn't it? It's also not in here. Is it? How do I put it in? Add symbol, Pandora. Is it gone in? Yeah, it is in. It's in there now. That's what I'm looking at, isn't it? Somebody's disappeared, have they? No. What happened to that GGL? What was the price when I looked at that? Zim integrated shipping, another one I looked at ages ago. Still around about where it was. What other ones have we got? Celanese, which one's that? Oh, the Settle Chain one. STS, is that the one? Yes. Oh, fuck me. This is the one that the guy told me about. Should have listened. I looked at this one early on in my videos, and the bloke told me to watch out for a potential takeover. You know, I didn't understand the play at the time. Xerox as well. Oh, we knew about this one the other day, but when I was looking it up, it was still above where it is now. Greg's, BME. Ooh. What happened there? Earnings. Sometimes it's good to go back through and look at some of these. Other times it's not. We're just pissing around now anyway, wasting time. Disney. Brave materials, yeah. Lufthansa. Whereas I can't remember when I looked at some of these. Anto. No. PBF. Pets. Looks awful. Anything worth looking at? GTN, Grey National Television? Nope. WPP still looks awful. BBWI, Bath Body Works. That one's obviously gone. Got that one off. Hog. Oh, Holly's gone up. Really? %. Maps. VRRM, we looked at these ones we recently looked at. MC. Oh, AMC's done quite well. Nomad, Foods, still doing rubbish. Echo Brands. Just looking at it down around there. Anyway, look at what you could have won. That's the problem, in it. Yeah, anyway, so back to Pandora. It looks like a very good company, doesn't it? 78% gross margins, 17% simple free cash flow margin, operating margin of 23%. It's got debt, and it. I don't know that my enterprise value is correct. I got 22. What have they got? Has he got anything on here? Probably not. What am I looking at? This one. Yeah, 59 billion. Not right, is it? Something's not right there. I don't know what it is. It's going to be the price. Oh, the price is wrong, isn't it? 579. It should be. Why is that so wrong? I don't understand. This PNDORA is DKK. Why is the price not? What was the other one? PNDR F. Nope. Is it that one? Dora.co. PNDORA. PNDORA.co. Let's try that one. That's it. There we go. Now this is wrong. Fucking hell, come on. Let's see. Let's try. Oh, let's change this a minute because I want to get the figures right. There's no point having the fucking figures in there if they're not right. What was it? PNDORA.co. We want that one. Get data. I know I was just about to say goodnight, but we're back again now. Revenues. 32. What was operating cash flow? £7 billion is Is that right? Financials, CFO, TTM, 7 billion. Yeah. Okay, so now we might have the right data. This is the problem when you go outside the USC. I've been moaning about it, and now we've seen why. Right. Income, balance, cash flow, comps, enterprise value, 59. Now we're talking. Now we're talking. Now everything seems correct. Now our figures are better. Yeah. On there. Boom. 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 Right. Now the figures are bloody correct. Simple free cash flow yield to EV of 10%. That's still 10 years. I reckon it's going to get slightly worse as well. This is really good though. This is good. This is good. No tangible book. Going in the wrong direction. 433 revenues a share, so it's trading over 1 times revenue. No, it doesn't look so great. These metrics look brilliant compared to others. This looks really good. Return on capital is very high. But cash flows, simple free cash flow, worse. Gonna get worse. Oh. I'm not interested in that SIG, am I? So do I just chuck it in here instead? I think SIG is fairly valued. Let's try this in the big sheet so we can see it over longer term. We were going to bed. Now it seems we're not. Shit happens, huh? Nope, not there. There. Right. Main metrics. Oh, we've got to change this over. What is it? PNDORA.co. There we go. Now we're cooking on gas. Now we're cooking. Now we can see true historical ones. 10, 8, 9, 15, 13, 12, 10. So it's around about 10. So simple free cash flow dropped off. Yes. No. Relative to the price, isn't it? Enterprise value has been very consistent, 62. Share count. Ain't much better, is it? It went way up here. Must have been an acquisition of some sort. Now, I'm not so excited about it. It trades at a premium to what SIG did because it's a better underlying business. When you've got margins like this, it's a much better underlying business. Return on capital is much higher, but they're not really translating it into growth in cash flows, are they? There was a period where they were. Silver, they're saying silver is the problem with that. As investing cash flow gone through the roof? A little bit, not much, but it has a little bit. And operating cash flow has dropped. Working capital taking longer to pay. Stuff staying on the shelf longer, and they're taking longer to than they were. That's not too bad actually when you look at the average. 32 is the average. Post-COVID average is 25, so it's better than that. So then, you know, the revenue is not too bad. What's the average here? 200. The inventory staying on the shelf almost a third longer. Payables is way higher, so that's boosting cash flow as well. The chart looks so promising. The chart looks so promising. But to market cap there was higher, has been higher. I don't know. I was almost getting a little bit excited about it. Now I'm not so much. The engine of the business is very good. Their translation of that into free cash flow is not great, unfortunately. Alright, I'm going to leave it there. Probably quite a frustrating one to watch. This one has been a very slow burner, unfortunately, but I'm literally showing you warts and all on how I am trying to learn to become an investor. So this is it, you know. EBIT to EV 12%. Cost of debt's going down. But the cash minus the debt. What's the debt schedule? I keep saying goodnight, and then it's fucking changed again. Where's the debt schedule? It's down here somewhere because I've seen it. We accidentally stumbled upon it, didn't we? Net interest bearing debt. New question, because we're talking about Pandora. What is the debt schedule for Pandora? Oh, it's almost 1 o'clock in the morning as well, so I better bloody give it a rest. Come on. Net interest bearing debt to EBIT of 1.3. That's quite low. That's pretty good. Mature in 2028. 500 million in euros. Doesn't actually say, does it? But we're not making enough simple free. We are. We got billion. I don't know if that's euros or not. Debt schedules. Euros, so it's euros. What is then the conversion rate? DKK to euro. Oh, it's very similar. How do I swap this? Why is there not a button to just flip that? €7 to €1, 500 million. So 3 billion krona. I think it's krona here. Literally says right in front of me. 3 billion krona. This matures in 2028, 2030 is another 500 million. What, 4 billion krona? What are they making some free cash flow? Oh, okay, they can afford that. Their debt's not a problem at all. Their debt is not a problem at all. Cash on the books. 826, not great, but ain't bad historically. Okay, so I'm not bothered about their debt. I don't think the debt's a problem. The debt isn't a problem, not bothered about it. It's just a simple... Oh. I need to really get the EV down, but... Oh. I'm gonna go and think on this one overnight, because I am getting tired now. Close that one, because that's an out-of-date balance sheet. Where are we? Goodwill's very high, I don't like it. Got treasury shares as well. Alright, I'm going to leave it there. I'm going to ponder on this one. I don't know if it's going to appear in the next video or not. I might, because I've got a couple videos lined up now, I might leave the recording the video for a little while and see if I can figure out a screener that'd be more appropriate for stocks outside the US. Problem is, you've seen how much harder it is to coherently get the data together, especially if you've got to try and find, yes, it's all there on my sheets and we did find it, but not until the end of the video. Now, to be honest, that's probably on me. It's probably not on my sheets. I don't do enough outside the US to efficiently source the data to drag it in. We got there in the end and we got it correct in the end. So it's not that the data's wrong, it's just my ability to find it struggles more. But I need to try and get a screener where I can screen outside the US, I think. Anything on Open Insider before we go? Oh yes, there's a few we could look into. Alright, maybe next time we'll go for Open Insider as a screener, but I need to try and get a decent screener for the rest of the world, really. In trustworthy markets, that's the next thing as well. Alright. I don't know this video, to be honest, is going to be a particularly fun watch. It seems like it's been laboured to me, but I am quite tired, so I don't know. Nevertheless, thank you very much for watching. Please like and subscribe, and I will see you on the next one. Good night.